Hi, this is Bill Wood with Discipline Trading Decisions. Time for the weekend update for the crude oil futures market. But first, trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. Welcome to the weekend update for this Monday, August 28th, 2016. We're covering the crude oil futures market. So let's take a look at the monthly chart. Monthly chart, we are trending down, lower highs and lower lows. On a closer view, we are in a 2-month balance, 2 to 5 month balance, but definitely a 2-month balance. On the weekly chart, we are in an uptrend, higher lows and higher highs. We're looking to confirm this higher low here by breaking this high, and we were not able to break out of this strong weekly bar. So currently we are one time framing higher, but we are in a 2-week balance. Throw the Andrews pitchfork on here, and you see that we came right to this median line here, reversed there. It was a nice strong reversal. We're beginning to get a little extended, but the target is up here around 52.20, around 52. On the daily chart, it really just looks like we're in a big balance area. We do have higher highs and higher lows. Again, we want to break 49.41 to confirm this higher low. But on this bar here, it looks like it left a pretty tall tail, some excess up here. So that's not good for the bull case. We said last week that I wasn't sure if this was a 1, 2, 3, 4, 5 that we were going to continue up, or if 5 waves had somehow gotten in here. 1, 2, 3, 4, 5. Either way, this last bar here kind of looked like capitulation, and we mentioned that last week. So this may just be a pullback to either the high volume node around 45.75, or this trend line here, which could be arriving at both places at the same time. I don't remember if we showed this last week, but if you draw a Andrews pitchfork here, kind of gave you the resistance level up here. So again, you may have support up here for a 5th leg up, or you could have an A, B, C correction down here. But if this is somehow the 4th leg, 4th wave, 1, 2, 3, 4, if this is the 4th wave, it's not supposed to make it all the way down to this 1st wave. So this would be a good place to reverse, A, B, C. On the 4-hour chart, we are ranging in here. We do have higher highs and higher lows. We would need to break this low here to change the trend. If we had this spike up here on that announcement, and if you take a look at this Andrews pitchfork, you can see where sellers stepped in. On market profile, we gapped up on the 18th and just traded in range up here. This looks kind of like short covering. We opened on Monday right around the bottom of this day, and it was comfortable there, just balanced there. The next day we gapped lower, and I was looking for it to trade into this high volume node in here from 47 to I guess 39, and never did make it down there. It tried, couldn't do it, and so what happens, it got too short, and that's what you have here is a short covering rally. So the following day, this 5-day area is just pretty much balance here, right? And a clue that was going to happen was you had single prints here, and the market was very comfortable just filling in those single prints. Sometimes we see when the market cannot fill all of them that it'll continue in that direction, but it was very comfortable filling that in. This day left single prints. It was comfortable filling that in. So you have a little bit of a high volume node here and a little bit up here. So today we spiked up, had rejection. So we could, this could head lower from here. Actually, it had the perfect opportunity to head lower, like the S&P 500 did today, but it held strong. It didn't even make a lower low. So we just may be comfortable in this 4750 area for a while. It may balance around here for another day or two before it decides what direction it wants to go in. If I had to pick a direction, I would say to the downside. So if it breaks out to the upside, that would be the surprise move, and you may actually have a pretty nice move out of that. So why do I say the downside? Because there's not really any excess down here. You had a little bit of an excess here. You have excess here, excess here. Like every time it tries to go up, it's turned back down. So there are definitely sellers up here. Now, if it breaks this area, then these people, they're wrong. They have to get out. And I think they're the ones that are holding the market down right now because, as we said before, most everything is in uptrend. So we reach this area up here and just kind of stalled. Now we're balancing in here, and just because there's no excess down here, this is likely to be revisited. Now, when I say revisited, I don't mean a new downtrend. I just mean that this would be revisited, repaired, maybe get some excess. So it looks like you have a supply zone up here. Definitely sellers up here, buyers down here, and they're probably going to make a high volume node in here somewhere. So where can this head? So remember, right now we are in an uptrend. This may have a fifth wave. On the weekly, we had that target up around 52, but right now in the middle of this mess, there's not much to do. And keep an eye on this trend line. Price is coiling up. This could break out in either direction, and there's not much to do while it's in this area. So I need more information from the market. If it breaks this area and doesn't reject it, then I'm going to be looking for areas to get short. And if it breaks this area and doesn't reject it, like this here, then I'd be willing to take a little bit longer trade here. What did we say before? Maybe up to 52. Got to be careful of this trend line here, this median line. But I think that if it breaks to the upside, that's the least likely, and so you would get the larger reaction. So this is Bill Wood, and if you're watching this anywhere other than my blog at Disciplined Trading Decisions, please go there now and check out our other resources. And while you're there, sign up for our weekend updates. So remember to stay motivated, stay focused, and stay disciplined, my friend.